Hey everybody, it's Captain Seth and your Uncle Paul. Welcome to the show. Welcome back into all of our Patreons all across the world. I love you. You know I love you, and we appreciate the support. I know you guys are loving Discord, and we welcome you in. For new viewers, our patrons and YouTube watchers have asked for this video multiple times, and we're finally going to get into it. This is a breakdown of what a 10K is. A publicly traded company produces these documents for us to read and go in a real deep dive look at their company, their financials, to see what's going on. This is a part of the deep dive that Paul does after our 8-pillar analysis. So if you're new to the channel, again, we use our 8-pillar analysis to look at stocks and the health of companies. If we're interested in these companies from a 500-foot view, we use our 8 pillars as a screener to maybe look deeper. So here we are with your Uncle Paul teaching you about what a 10K is. At the end of this video, you should have a better understanding about finding and analyzing a 10K, and it'll all be done by my consigliere, my love. Not my real love, Paul. I guess we got a lot of comments.
My side piece.
We're not dating at the moment, but you never know. But welcome into the show, Paul.
Once
how are you?
Once he drops the old bag.
It's Paul, right?
It is Paul.
How are you, my friend?
I'm wonderful. How are you?
Good. Tell me about your excitement about this episode with the 10K and why you look into these.
So first off, we got this because a lot of YouTube comments were, hey, how do I look into a 10K, etc. But the big focus for us was our Patreons. Our Patreon has been growing like crazy. For those of you who don't know, we do the 8-pillar analysis. Our 8-pillar analysis is our 500-foot view. I have created software. I currently pay for Y charts. It costs me about $500 a month. So everybody kept asking, how do I get this? How do I get this? I can't afford $500 a month. Well, folks, Uncle Paul has come to your rescue.
That's correct.
I'm going to show for the first time ever the sneak peek.
Come on.
Of our Everything Money website. Now, guys, look how pretty this is.
This is it?
This is it. You're going to get key metrics. We're going to add more key metrics to this. As you see right here, there are tons of key metrics right here. I need to add a lot more. All right here. Tons more to add, okay? But this is going to give you everything that Y charts gives you that I use. Income statement.
Wow, look at that, Paul.
All the way through. Balance sheet. All the way through.
So if you're new to the channel, this is the software that we have developed for you. Paul, we began this show with me asking Paul or Paul wondering, how do we look at companies? And he said, well, I just use these 8 metrics. We called them 8.
Actually, no, time out. I didn't even know they were 8 metrics. I just sat there. Remember, you said to me, what do you look at? I go, I look at this, and it was 8 things. That's what it was. I didn't even know it was 8 things.
Yeah. So this is developed into our 8 pillars, which people love. It's been a verb now. Can you 8P a company? And so we usually do that. But what we're doing is a lot of questions have been, where do we get this analysis? Where do we get these financials? Do I have to pay for Y charts? What does it cost? Google or Yahoo Finance is now charging. We are delivering the software.
And it's more than just that, though.
Keep going, Paul.
Here's the 8 pillars tab. It'll tell you X's and checks immediately.
Step out of the way there. I can't see the 8 pillars.
The 8 pillars tab will tell you all the X's and checks.
Look at that.
X's and checks.
Look at that.
And when you go over them, it'll tell you what the actual rate. So right here, this is an X. The ratio is 35.29. That's why it's less than. And guys, the best part about all this is this website is not going to stop. I have a long list of programs for financial analysis and data that I'm going to be adding to this site. This site right now, if you join any level of our Patreon, you get it for free. Our levels are 12, 25, soon to be 49, and then 250. The highest level is complete access to me. There wasn't $100, but we sold out completely. This is so worth it. For $12 a month right now, you can get this entire site. As we add to it, you're locked in at the $12. So when the minimum price goes up from 12 to 16 or 20, you still pay 12. We're going to have increases every year for 3 to 5% increases for our costs. But this is crazy if you're serious about investing. I pay $500 a month. You will get this for 12, 20, 49, or 250 a month, depending on what access you want. So this has been a project. It's going to come out April 15th. This is incredible. We only have 233 spots remaining in the $12 level. Go sign up now. It'll be well worth it. On top of that, you get a lot of other benefits, which I go through, tons of other benefits. Anyways, the bottom line is this is what we're going to use starting April 1st, April 15th. I'll be using this on the site solely while we're building out more and more. We have to beta test it and get a lot of testing done.
Very exciting, Paul.
Now, to go to the famous 10K. 10Ks are boring to read, but you got to read them. Or you got to find somebody who reads them and gets you information. 10Ks are typically 150, 200 pages long, but they give you the deep, deep, deep look at the company. It'll give you an intricate look at how the company's being operated. Now, there are some major things, the 5 things I look at within a 10K that are most important to me. First off, let me show you how you find a 10K. That's the first thing.
Please do.
We're here at sec.gov. SEC is the Securities and Exchange Commission. Every company has to file all these documents with SEC. You go right up here to the search function, and let's say we're looking at Microsoft. You type in MSFT, you click that first link. Very simple. You come down here, a lot of documents. Filing type, 10-K, hit search. And the most recent document, filed July 30th, because Microsoft's annual calendar year ends June 30th. So you have to know what their calendar year is, and you pretty much click on the most recent documents tab, and then the first link.
Do the calendar years change for different companies?
Yeah, different companies have. Most companies end the end of the year for their calendar year, but some have it. I don't know why. Okay. Retail sometimes has it in January because they want to show the full holiday season, etc. So it all depends on the company.
Keep going.
Guys, look at how long this thing is. This thing is so long for Microsoft. It is.
Good Lord.
108 pages. This is one of the smaller ones.
So I'm bored already, Paul. How do we stay active in this thing? Where do we go?
I do recommend you read the whole thing, but you're probably not going to. Here are the major things you need to look for. First things, the risk section. It's one of the first things in the company, right here, risk factors. Now, what to look for in risk factors, they're going to list all these generic things, like, oh, if all of a sudden people hate software, it's going to go down, or business is going to suck. Now, I'm being facetious when I say that. I'm sure that's not one of the risk factors, but there'll be a lot of generic risk factors, like if the U.S. economy suffers significantly, there'll be big risks to us. If all of a sudden, our costs increase because developers are in high demand and we have to pay more, that's a risk factor. But the main thing for you to look for is there'll be other specific risk factors in there that are not so generic. What are they? I don't know. It all depends on the company. But you have to read these things, and you have to go look at how their risk factors have changed over time. So from year to year, if risk factors are popping in, that's a red flag. And the reason being is it means that their legal team probably said, hey, we have a problem right here. We want to disclose this problem right now. So look for changes in their risk factors. Now, another great thing, guys, is if you join our Patreon, there are other people that will have certain strengths. Some people love reading these, and some people like doing an overview, etc. You can go into a chat and say, guys, I'm looking at Microsoft. What are the risk factors you guys see? Somebody will have an answer for it. We have 700 people in it right now, and it's growing. Our goal is to get to 20,000 by the end of next year. So you'll have a lot of people to discuss this with. Okay, that's the first thing. Second thing, management. Management will discuss a lot about their plans for the future, how things are working out from the past. Again, you want to compare that to the past. What did they say before? Did they execute properly? Did they actually honor what they said they were going to do and actually implement it? Because you want to make sure this management team isn't just talking, they're actually getting things done. That's something you will read in these thorough documents. This Microsoft one at 108 pages is one of the smaller ones I've seen, by the way. Third one, footnotes. Now, footnotes, you'll notice if you ever read any document that mentions a 10K, they'll sit there and say, hey, if you see the footnotes. And the footnotes, the companies will bury a lot of information they don't want you to see a lot of times. For example, they have a piece of debt that is coming due, or they were out of covenant for, and they were going to get called on them. They will have footnotes in there about that. They'll have footnotes in there about changing the way in which they recognize income. That is a huge thing to look for, because when they're changing the way in which they recognize income, that is a manipulation that's been used a lot over time by companies who are committing fraud. They change how they view income to make it look better for themselves and for the company as opposed to what's actually happening. Enron, Tyco, and WorldCom, all these guys did this like crazy. And in their footnotes, they're like, oh yeah, we decided to change it to this because of this, and you want to make sure it makes sense. 4, there's a thing called a proxy statement. It's at the end. You might find it on the sec.gov website. It'll tell you how they're compensating their executive team. Now, I will say, this is probably more important on smaller companies than companies like Microsoft, because a company like Microsoft isn't going to pay the company is $1 trillion, whatever the company is. They're not going to pay their CEO $10 billion a year. Their CEO is going to make 50 or 100 million a year, which is a lot of money, but it's not making a material difference into the CEO's, into the company's life. But on a small company, you want to make sure that smaller companies, the executive team owns big chunks of it, and they're being compensated in the same way you'd want to be compensated, by driving profit and revenue. those are the ways you want to do it. Don't criticize a company because the stock price is down. Well, the way stock prices go up is driving revenue and profit consistently and making the balance sheet better. The fifth thing I've already mentioned. It was in the footnotes. The biggest thing I look for is revenue recognition, because that's revenue and profit recognition is the biggest issue we have with companies. Are they changing it? That's why you got to look at the cash flow statement. That's why in our 8 pillars, we look at cash flow so much. If there's a disconnect between the cash flow and the profit, which over time should be similar, if there's a big disconnect, you want to understand why that is. If the cash flow is a lot lower than the profit being shown, like Enron was, that's a big red flag. You want to figure out why that is, okay? So, risk factors, management team, footnotes, proxy statement for the compensation, and I look at the how is revenues being changed and profits being recognitions being changed over time. So those are the 5 big things. It's not fun, but if you want to be thorough about investment, that's what I talk about when doing a deep dive. I talk about doing these things. I personally don't read a full 10K myself. I have people where I come up with 8 questions, 9 questions. I give it to them, they find it for me. It comes up with 20 more questions. And that's how I like to do my investments. That's for me though. For you, for most investors, you should be reading these documents fully, or figure out a plan for how you're going to invest broad-based, like based on cash flow, and stick to it on a large portfolio of stocks. Everybody's different. You don't have to read 10Ks to be a great investor, but if you want to be a really superb investor that gets really high rate of returns like Warren Buffett and those major investors, you got to read the 10K.
You might be asking yourself, this sounds like a lot of work for our investments. Paul has educated me and thus our patrons and our viewers the idea of that we're not looking in investing in hundreds of companies and chasing down very volatile companies, is we want to buy 20 to 30 great stocks of great companies, and our 8 pillars helps guide us toward which companies to look for. So what are the most alarming things you see in 10Ks, Paul, that would lead you to avoid a company even if it fulfills our 8 pillars?
Well, the interesting part though, Seth, is I've actually read 10Ks and said, oh my God, this is better than I thought. The biggest example was Southwest Airlines this year. When Southwest started to take a tank because of COVID in 2020, I started reading the 10K and I realized how much profit they lost because of the whole 737 MAX issue. And I was like, oh my gosh, these guys still did awesome after losing almost $1 billion to this issue. I want this company. So it's not just finding negatives. It's also about finding the positives in the company that aren't really being advertised very well or being talked about a lot. To me, Southwest was a no-brainer because of that alone. I was like, wait a second, this 737 MAX problem is going to go away in a year or two. And by the way, we're 9 months later, 737 MAX is flying now. So these are the things I look at going, wait a second, this is incredible. I found information that made me go, this is awesome. Like I was really excited about Southwest because of reading the 10K. But when it comes to finding negatives, the ones I talked about before, I'm most concerned about debt and revenue and profit recognition. Those are the biggest things for me. I want to make sure, I mean, risk factors are big, but I skip the obvious risk factors. I skim them. And for the ones I go, oh, I've never seen that one before, I read those thoroughly. That's the big thing for me. And if you want, I mean, it's hard to sit there and say, here's a specific example. But I'm glad I had a specific example for a positive thing I found in a company that made me invest because I read the 10K. I would not have invested in Southwest if it wasn't for the 10K.
If you're confused already and just a normal person like myself, it is a daunting task to maybe look at these. The key is, if you'd like to join our Patreon, we have developed a community of like-minded people who think in the same direction. And there are tons of discussions about these 10Ks, and a simple post in our Discord channel could involve a lot of conversation with smart people all around the world, and Paul can certainly check in and add to that. So that's the community we're developing, and it's incredible. I would say, guys, on a lighter note, obviously we appreciate all our support from all around the world. A little look into who we are in terms of Paul and I here at Everything Money. If you're following some YouTubers who look like they're doing this from their basement, and they're just regurgitating news. Paul, this is one take, guys. So if you're watching the Graham Steffans of the world who have these very segmented type videos, they might take 5 to 10 takes to get the right sentence. This is Paul. This is all one take off the top of Paul's head talking. It's just amazing to see someone who actually knows what the hell they're doing in this world in action and teaching us. And you can get a lot more of that by watching his channel, subscribing, and being part of our Patreon. So, Paul, thanks for the analysis of the 10K. Follow along, guys. We go live every Tuesday and Thursday at 1 p.m. Eastern, and we're happy to have you in. So thanks for the follow. Love you guys.
Bye.